All right, let's make sure I have all my tabs open. All right. Okay, let me make sure I cut this down. All right, I think we're good to go. Testing, testing. Stay on. My volume must be low. Mic check, mic check. All right, let's see here. Let me get these tabs pulled up here. So we can get to work a little bit here. Power and profit to the family here. Just giving a little time. You know, it's again Sundays always hit or miss, right? Because family functions and this, that, and the third. You're trying to stay focused on those kind of things going into the trading week. But I like to take the position that it's a great time to, as always, you know, get some very useful training in. So as we again look forward to this this evening and trying to kind of finish off what we kind of spoke about last week in relations to how the market works and also, you know, positioning scaling. We're going to touch on that, and we're also going to have an in-depth, pretty much a Q&A in essence to you know, figure out where everyone's at in terms of their value, their goals, and whether, you know, what are they looking to accomplish here in the short-term value through training, not only training, but also in the trading too. So give me a minute here. Let me get my things pulled up here. I had to find a way to get the notices out a little bit more effectively, because I posted in the tab we got now for upcoming events. But I do know between this room and also the We Trade room, more people definitely will, you know, be in the greater fold of the crowd over there. I need to find a way to make sure I keep that updated as much as possible. Either way, this lesson is, you know, value is going to go forward, and within that, you know, we'll, you know, have it docked inside the previous lessons value where, you know, someone is obviously busy, things like that happen, they can always go back and reference it for future references, right? So again, we want to make sure that we're cognizant in that value where people can, you know, double back and get them some good data, right? Get them some good information, right? So again, let me, man, I'm telling you, I missed Friday. Yes, I was kind of busy a little bit today too, but either way, trying to, where did I do with my, so I'm pretty sure I left it open and somehow we got the, where is my tab? I'm just looking for my tab. Bear with me for a minute here, family. Bear with me, brother, for a second here. 1 second. Uh, 1 second. Mm. 1 second. Let me get up 1 second. I'll be right back. All right. All right. Let's see. All right. Back in the saddle here. All right. put up the All right, so let me get this pulled up here. So apparently I had it up, and I don't know, restarting at some reason why it clicked off. I'm like, why would it do that? Why would it do that? Right, it was ready to rock. Okay, no worries. I just pull it up again. No worries. No worries at all. Let's pull it up again. All right. All up, and then I restarted just kind of make sure I don't have any lags, and it kicked my little tabs right on out. Typically wouldn't do that in the Explorer, but for some reason it bucked the trend today apparently. Okay. All right, we're gonna fix that though, and then we'll get back on topic and on task here. I definitely want to hold up the Sunday vibes here with you guys. And again, we got the futures market getting ready to open up here in the next 20 to 30 minutes, or about 30 something minutes. And definitely look forward to that with all this new, change of events in terms of this tariff and trade war news that's seemingly, still in the headlines every other day. All right. The closer we seemingly get to that moment of truth, the more it becomes a headline topic where the market is constantly trying to digest it. All right. So it's definitely something worth paying attention to moment over moment. All right. So, all right. So here we go. I'm like, man, why did it kick my stuff out? I had them all set up too. But, that's how it happens. All right. All right. Make sure I share the link. And I have to get the link out to everyone too. I had some people I have to send it through email because they're not, always in the Discord room. So another fashion of making sure everybody's kind of on the same page with that. So again, I hope you guys did have a great weekend thus far. Closing out the week last week was certainly kind of interesting watching the market, do what it did. And you're talking about going on 12 weeks here with the market just kind of been steady, steady in that incline off the December lows. And it's, obviously bringing a lot of question into, are we overheating at this point, right? Is it best to be, pulling back a little bit on your margin values if you have any loan positions out there and going more to cash positions to protect yourself, or is it even a good time to hedge right now, right? Hedge the market, right? So again, some of those things we're definitely going to discuss in lieu of, the topic as it is stated, basically, how the market works, and, then dealing with, proper scaling. Because I think now is a good time to really have that discussion in depth, because it's a lot of red flags out there that we have to keep in mind day over day when we're trading. And a lot of that has to do with, making sure, again, we're not overly exposed, right? As I'm always saying, make sure you're not overly exposed. Is my thing back on? Okay, it was okay. Making sure we're not overly exposed, in the market, more or less, right? Keeping our positions tailored to a certain, percentage value or nominal value where we can, stay kind of current in our risk versus reward ratios, right? So it's important. So again, just want to touch on that. So bear with me a little bit again. Sorry that it took me a little second here to get stuff set up, but I had my tabs open again and it got kicked out. And that wasn't necessarily a good thing. All right, but it happens. All right, so let me get the link over here. Some of the other guys as well. And we'll rock out here before we get ready to, again, see this futures market open up, right? And so also we're going to discuss this whole, well, I'm not going to call it a new fast. It's been around for a while, and I've spoken about it several times in my own little right. But the idea, again, when we're talking about loading zones, right? When you hear people speak about, front loading, again, the most trending topic is this supply and demand thing, because again, a lot of people are using this. It's always not nothing new. Again, there's always it always has to be a value of demand, and when that demand gets filled, then it turns to a value of just oversupply. I mean, you don't have any more buyers left. You just got all the supply sitting, and typically when that happens, that's when stuff goes stagnant. The price value always begins to drop. It's not sought out that much, and because of that, stocks begin to pull back in that moment, right? So again, it's a very basic theory. However, it's a very useful value in practicality when you're trading the financial markets, not necessarily just regular common stocks, but also when you're dealing in Forex, crypto, whatever, right? You have your level, so to speak, right? We basically, formally or affectionately known as support resistance, I should say, right? So in that moment, again, we want to be cognizant of that. So, charting and technical aspect is a great part of what we do. It's pretty much, a foundation aspect in trading that you understand your levels, right? What happens is a lot of people who come into the market, they get sucked into FOMO, fear of missing out, and again, they may get a tip from a person or this, that, and the third. And basically, what happens is, if the stock or the asset, whatever, has already made this particular move, and let's say it's already 30% up, off its lows value or whatever, this new volume came in, this new catalyst to kind of catapult the stock. Well, at that point, it may be getting ready to hit some real big levels of resistance. Right? It's thinned out at this point. It's exhausted. The RSI is probably screaming. And where you may see, well, hey, this is a good opportunity to buy in here, because obviously there's a lot of tension happening here. You may be have came to the party just a little too late, right? And because of that, again, you'll find yourself, pretty much holding the bag if everybody begins to dump in that level of oversupply, right? So again, the demand has phased out, and now I just left with a lot of supply in the asset, and no one wants to buy it at that price. Again, like no one wants to go to the store and buy, the new chicken and gravy Lay's potato chips. 3 months after it's been out, when it the peel of it kind of wore off, right? You don't want to pay full value for it, especially when others have tried it and they tell you like, hey, it's not that great, right? But either way, again, in these moments, it's just indicative of us that we make sure that we're, able to be able to read these signs, so to speak, right? In essence, to make sure we're not, buying in at extreme levels when it's better to buy in, right when the asset is beginning to, get new life, new volume. All right, a trending catalyst or topic, the sentiment is starting to change. Decent short interest, and nothing kind of called them to maybe want to cover, which caused the price to go up, right? We're talking about, good old fashioned short squeeze in some cases, or just, aggressive bull buying, right, into the asset. So again, in that moment, we're trying to capitalize on that, notably. So it's, if we can front load in that moment too, which is really good, getting ahead of the game before a lot of the retail traders really get behind it, right? So again, it's just another common aspect of what we do as traders, in knowing, how to position ourselves properly. Because again, if your stock is only willing to give up 30%, based upon, hedge funders and banks that are playing the asset as well, because big money obviously is moving it more than retail traders. We understand that, we're the small fish and the big money is obviously, stoked in the, the hedge funders and the banks that are buying, right? The same way how we know the banks and, institutional values holders obviously control a lot of the Forex market, dealing with the exchange pair, so to speak. And so when we buy into individual stocks, from a common equity perspective, it's somewhat in the same, same value. If they find value in enough to want to invest in it, then, it'll help catapult it well, catapult the stocks well and give it new life, right? And then we can get some, a notable move out of it, right? So again, just putting that out there in that aspect. So nothing that you guys probably don't already know, but either way, we're going to discuss it, right? This my mic. Let me see if this mic. Okay, yeah, it's running. All right, because sometimes this mic be acting retarded, right? If not, my little guy then pushed it to the max. Sometimes picking it up and dropping it. All right, but yeah, so let's get to it. So understanding again, how day trading works and proper, position and scalability, right? When we're talking about trying to find out, what makes the market move, what's so exciting about it, what gets us up out of bed every day that want to go trade it. It's the ideal of, the opportunity, right? That is, that keeps us, focused in this in the ideal that we want to trade, so to speak, right? And so when we're, talking about the ideal of how day trading works, because again, you find out that most people don't have the time to day trade. They may be better swing traders, right? They may be more into value investing, right? Set it and forget it kind of mentality, right? The Warren Buffett theory, right? It's weird because I was actually reading an article today about how taking the Warren Buffett approach may not always be the best approach at this day and age because of the way that the assets are trading and everything else that's surrounding the market. Even though he has proven to have a better return than a lot of people, that as the algos and others too. But again, those times are slowing down now in terms of the old conventional way of trading, based upon the new data points that we have at our availability, the different metrics that we can use to capitalize on these stocks when we get more access to them, based upon technology, right? When before you had to kind of really search and dig and figure out what was out there. You got heat maps. Again, you got algos. I mean, you got all these scanners and all these different things that we have as cheat codes, so to speak, that really helps us to have a better, inside vantage point and being able to trade these stocks one over the other, right? And so when we're talking about, something as basic as understanding how, day trading works, right? Right. Again, it seems weird, but we have to talk about it from that perspective, because a lot of people they'll kind of miss exactly, what that really entails as a day trader, because it's more than just buying and selling, right? It's more than just, hey, you got any stocks, anything running over there, and then you go trade it pretty much. No, it's deeper than that, right? There's a lot of different things and factors that go, into being able to trade the market from a day-to-day perspective, right? And one of those is, again, figuring out, what the market offers, within the intraday perspective, right? What is it, what are the key factors of certain sectors breaking out, certain, geopolitical catalysts that just driving the market, right? Where the oversold plays at, right? If you're trying to bottom fish and get in at the bottom, so to speak, right? So again, when we're looking at, those different aspects, so to speak, it just makes us, a little bit more cautious, so to speak. And that's just going out there just buying anything because someone say, hey, this stock is rolling today. Is this on fire? Whatever. No, we're going to make sure, we do things, again, responsibly as much as possible, right? And so again, let's go there. Let's open up the screen here and let's read into this value here. Again, we're going to focus on strengthening our psychological disposition, and that's to put ourselves in the best position to make good decisions, right? And being able to make good decisions is also based upon how much knowledge you have, right? Right. And the lack thereof could be problematic, right? Not that you have to know it all. You don't have to know, every SEC file. You don't need to know, the more complicated aspects of fundamentals. Obviously, you'll grow in time and understand those things. Obviously, I'm still learning and growing too in those aspects. But as long as you can put the market in some kind of perspective enough to, visualize it, internalize it, ingest it from a due diligence perspective, then, apply, solid discipline behind your trading values, then, at least you'll put yourself in a good position where you make them walk away, with some valuable profit, right? Based upon doing some basic stuff. I'm saying obviously it's a little bit more complicated in depth, but we all know as traders, once you kind of have a good understanding of ebb and flow, how the basic market movement is performing, day over day without any kind of, trick bags, things like that happen, you can pretty much, find you an opportunity or a winner out of a day worth of trading, right? And that's not necessarily mean swinging for the fence, because that's another big problem that happens where people, they want to swing for the fence, right? It's go long or go strong or go home, whatever. And that's not always the best kind of, modus operandi to kind of fall into, right? So again, I like to deal with the basics, and then we can just jump into a lot of complicated stuff along the way. But ultimately, what I have found to be very true is that you gain more advantage as a trader, more than advantage perspective, once you keep a lot of some core basic principles and ideologies kind of in check, and understanding where you fit into the grand scheme as a day trader. Now, again, that also could be very, revealing, for swing traders in the same value and or value investors, right? Because you still are in a position where you may be in a position long, like Apple. Again, you might have been a person that was buying Apple when it was breaking out and going bananas, right? Back above the $200 handle. And then you kept hearing people like Warren Buffett buying more shares up there, and everybody getting super bullish on it. And then they get ready to release their Q3 earnings report. Obviously, you may have missed the fact that they were having issues with their iPhone sales, and China was a big issue at that point, even more so because they depend on a lot of the Chinese market to kind of get their phones in the hands of a good international market. Then they have a big head count or population over there, and they're very tech savvy people. Now, withstanding the fact that tariffs obviously put a damp on that, and also they have court proceedings happening right now where they're fighting people like Apple with with the proprietary people that's in house, so that they don't want that their I would say their market to be overran with foreign products, so to speak. When they got Huawei, they got the ZTE thing, this 5G thing is getting ready to pop off. And so again, all that aside, again, it's good to be very cognizant of those things as much as possible, as opposed to trying to guess your way through it, right? And at that moment, you would have saw that okay, Apple's very extended. You're talking about a big run up, pretty much from the latter part of 2017 up until maybe around the third quarter again of 2018, right? When a lot of stuff began to become more relevant, that the market is starting to slow down a little bit, right? And so in that moment, you could have saw this as a great opportunity to say, hey, let's take some product off the table. We got all this stuff that's looming, this tariff stuff is starting to be a problem. And so let me be cautious right here, right? Let me scale back a little bit from margin. Let me go to more of a cash position if I'm doing anything, or trade it from a perspective of options more or less than just using a lot of margin. And so again, in that moment, what Apple pulls back, right? So again, let's jump into it. Again, saying all this, say that understanding, how day trading works, one over the other. So you don't get, kind of sucked into, a bad trade or a bad moment based upon, again, not being able to read the tea leaves properly, right? So again, in this chapter review, many of the basic day trading hopefully answers your questions about, what day trading is and how it works. Now, again, I know some of you guys like, okay, I'm a little far beyond this at this point after the point. Why are we going here? But again, I'm structuring it from a very basic perspective, because this is what you call, a recon value of good disciplinary values and action that you need to, partake in, when you're trading, right? So the chapter will also introduce some of the main tools and strategies that you'll come across later in the book, right? So again, this is the how to day trade for a living. I told you guys, literally about a week or so ago, 2 weeks ago, that we was going to really hammer some good lessons out of this book. So I really find it to be a very useful aspect of, of trading, right? It's well thought out. Again, we know about trading in the zone. There's so many others. Again, I'm a big fan of Mark Douglas. Obviously, I'm a big fan of Andrew Aziz, many others, right? But again, I do like to, have some kind of core values that, I can go back and reference from. And I know it, makes a lot of sense in terms of how I trade, one trade over another. And not necessarily mean that it's going to work for you the same, because everybody's different. But I do find this to be a very good universal, lesson value that we can all pull from, right, and get better as traders. Right. So as with any art form, tools are no value unless you know how to use them. Excuse me. Let me repeat that. As with art form, all right. As with any art form, tools are no value unless you know how to use them. Right. Again, what's the use of having a chisel if you don't know how to chisel properly, right? Or a router, you don't know how to router properly, right? Or whatever, right? Or a computer, don't even know how to use it, right? This book will be your guide in learning how to use these tools, right? So again, day trading versus swing trading, right? The biggest question I always get, a lot of people inbox me or just, hit me up in the Discord room, the Twitter and inbox, whatever, man, is it better to be focusing on swing trading as opposed to day trading? Do you think I'm a better day trader? Should I just focus on swing trade? I get a myriad of questions. Again, some from the most basic aspect, and some of them a little complicated based upon people's corporate careers, this, that, the third, and they're just trying to figure out what will suit them better. Trying to force first 30 minutes of the market or hour of the market, and try to trade that as a form of day trade, and knowing you got other things to do in terms of your corporate life. Or is it better just to kind of just focus on, swing trading and not put yourself in such a complicated, scenario by trying to, trade when you necessarily don't have the time to focus on the market? Because as a day trader, markets move, literally in nanoseconds, right? And it'll pivot on you just as fast as you, get in the stock, right? Or get out of the stock, right? And so we all been there at some point where your market is skyrocketing. You're in the stock, you get ready to get in the stock as soon as you get in, because again, you didn't chart proper support resistance, or you got caught in FOMO. And as soon as you hit the buy button, guess what the stock do? It dumps, right? It's like they were just sitting there waiting for you to get your order, filled, so to speak, right? It's like as soon as you hit the button, and the stock goes the opposite direction, right? That sucks, right? And so, not necessarily being able to, plan, properly for these moments because you didn't get a chance to really front load the asset, or meaning you didn't do enough due diligence, ahead of time. You didn't get a chance to see if there's any kind of notable cows, or you may have and just not necessarily, charted it properly from a technical aspect, and saw those support resistance levels as, key levels to kind of pay attention to. As I was saying earlier, this whole supply and demand craze that people are excited about, which has obviously been around for a while. I've spoken about it several times, but understanding that, you're buying when there's a demand for the stock, right? And you're selling when there's an oversupply, meaning the demand has stopped. And now it's time to pull back, right? And so again, getting in at the most opportune time matters, right? So day trading versus swing trading, right? A compelling question to begin with is, who do you look for as a day trader, right? Who do you look for, right? Excuse me, what do you look for, right? I'm all over the place. Let me get my mind. What do you look for as a day trader, right? The answer is simple. All right, and I might have said it right the first time, who, because again, that also matters, right? Because you got to understand where you are in the grand scheme of this thing, right? We are characters, intermingling with the market every day, and depends who show up that day, will let you know if you're coming in as a day trader, or you should have been that swing trader, right? So again, I might have been right the first time. Follow your first mind, right? So the answer is simple. First, you're looking for stocks that are moving in a relative predictable manner, right? Secondly, you're going to trade them in one day, meaning it could be in a matter of seconds. It could be a matter of minutes. It could be a matter of an hour, 2 hours, 3 hours. It could be the entire day, right? If you're fading the stock, right? Or if you trading a trend, so to speak, right? So you will not keep a position overnight. If you buy a stock in Apple Inc., obviously Apple today, for instance, you will not hold your position overnight and sell it tomorrow. If you hold it, onto the stock overnight, it's no longer day trading. It's called swing trading. So again, very basic stuff there. Some of you guys are already well beyond that. It's like, okay, well, yeah, man, I'm beyond that. I don't even know that. But it's important to, again, realize from a very basic, display of positioning, that sometimes we're missing the mark on some of these moves because we're getting in them at a time when we should have probably been swing trading it. And sometimes we're getting in it, at a time when we should have been thinking about day trading it, but you had thoughts of swinging it, right? And so again, you'll see your profits evaporate, because at the time you probably should have took profit, you held on and said, oh, I think I can give another day. And the stock necessarily didn't kind of give you the follow through that you wanted, right? So again, just getting some very basic stuff, then we'll get to the more nitty gritty stuff later. So swing trading is a form of trading in which you hold stocks over a period of time, generally from 1 day to a few weeks. It's completely different style of trading, and you shouldn't use the strategies and tools that you use for day trading to do what? Swing trading, right? Well, you would say, well, how so? Right? Because again, you're still dealing with the same metrics, right? Price action, right? Technical analysis, right? Any kind of fundamental investor sentiment that's behind it, right? And so in those same moments, wouldn't it not be the same value or same correlation value? Right? You would think, right? But it's not, because again, in a moment where a stock persists to be a good day trade, because you have all this abnormal volume coming in and people just trading off the hype, it might be a 1 day run of value, and it may not complete the 3 day rule, right? Give it 3 days kind of worth of running. It may just be a 1 day hitter quitter, right? Case in point, the stock RKDA had a big move up, what was that, Thursday, if I'm not mistaken. Awesome, news that they're looking to go into the cannabis space. Now, RKDA is a agricultural stock that deals in seeds, right? GMO-based seeds, pretty much. They make GMO wheat and many other things. I think they got a corn strain or whatever. And now they're actually moving into the marijuana space. Obviously, that's big news because cannabis stocks are booming right now. It's kind of like how cryptos, was the craze in the end of 2017, and everybody and their mama came out with a crypto blockchain on the end of their back end of their name because they wanted to be a part of that craze, right? You had tea companies that literally sold iced tea now going into the blockchain, iced tea blockchain, so on. So it was just a mess, right? So yeah, either way, that was a notable cause for them for the day. But even though it was not strong enough to kind of have that follow through where people say, okay, what's going to run to like 12, then it's going to run to 15, and this, that, and the third. And the stock didn't do just that. It had a good day, ran up pretty high, and it pulled back. And the next day, obviously, it showed that it had weakness in it, didn't have necessarily good follow through. So it presented in that one moment, due to the cows, that it was more of a day trade than a swing trade, right? And if you was going to even think about swing trading, your best bet, was to probably buy it at the end of the day after it pulled back so much, and try to play into the next, potential morning, spike if the investor still felt like it had some value in it and got out early, right? Before the retailers came in and sold it off more, right? So again, being able to recognize that is just very paramount, right? As traders, we need to understand that, right? So again, going back to the swing trading aspect. So again, it is completely different style of trading, right? You shouldn't use the strategies and tools that you use for day trading and swing trading, right? So do you remember rule 2, right? When I mentioned that day trading is a business, right? This goes back to a previous, chapter in this book. Obviously, this is like, I think the 3rd chapter here, and we'll double back if necessary. But the difference between swing trading and day trading are similar to the differences in owning a restaurant and a food delivery company, right? So again, you got Uber, right? Uber Eats, right? Or you got Grubhub, then you actually got the actual restaurant, right? Right? So they both involve food, right? But both they are very different. They operate with different time frames, regulations, market segments, revenue models. You should not confuse day trading with any other styles of trading, just because, right, trading involves stocks, right? So day traders always close their positions before the market closes. So again, basically is that, again, you shouldn't be able to, you should be able to discern, one from the other, right? And knowing, where you lie in the grand scheme of things when it comes to your position, right? Meaning, is it worth holding overnight, or was it just worth trying to, capturing that 10% move, that 15% move, or that 3% move, or whatever, right? And you're out, right? It's better to lock in profit as opposed to watch them evaporate, over time, because you said, well, I'm gonna hold on, I think it's gonna go high the next day. I don't want to take any profit off the table, or like I always say, take a partial, right? Right. And typically, if you're not overexposed, in the stock anyway, in terms of your risk versus reward ratio, then that has a lot to do with it too. Whether or not if it's even safe to hold a position overnight, especially especially if you got a big position on it, right? And so that kind of coincides with what I was speaking about earlier in terms of proper scaling, right? Positioning and scaling properly, right? And so that way you're not overexposed to a market that necessarily giving you a kind of clear indication that it's worth holding on to another day, right? So again, So many traders, including myself, do both day trading and swing trading, which I do, right? Some of you guys know that. We are aware that we are running two different businesses, right? Again, and we have gone through separate educational programs for the two kinds of trading. Now, again, you guys know well enough at this point, if you're holding a stock overnight, again, you're doing it under the auspice that it's going to, give you some follow through the next day, and so that kind of, lessens your I guess your how can I describe this word? What's the word I'm looking for? Your anxiety, excuse me. It lessens your anxiety because you're already saying that I think the stock has more movement in it because, again, it might have been a good technical play. It was oversold. The volume might have thinned out. Now you got new volume coming in. It might have had a word catalyst. And so, again, you're looking for that 2 or 3 day rule value to kind of kick in and give that follow through. But over time, basically what's happening is you're scaling into the position as the true value of the price action reveals itself to you. You're not just going all in out the gate, right? What some of these traders do, and they'll say, well, I'm gonna swing it. I'm like, no, you're like overexposed, right? If 10% of your account is locked into this trade, over 10% of your entire buying power account is locked into this trade, this one trade, then that's not necessarily a good risk versus reward, and it's not good risk management, number one, right? And so that could be problematic if the stock sells off the next day, because, again, institutional holders like, the big banks and hedge funds, decide to want to dump because the stock obviously hits a big key level of resistance, and it showed that it couldn't break through right away, and you start seeing some big selling blocks, based on level 2, right? And what the banks are saying, hey, we got our money and we out, and so the rest is just on the retail traders kind of take the next level. And so, again, in those moments, being overexposed can also be another big problem for you later on down the line, right? So, again, we want to make sure we keep that in mind, right? And so that's why it's important to understand, how you should trade certain, stocks one over the other based upon, their daily price action values, right? Never mind the fact that, the investor sentiment may still be there, but, the price action may show another different reality once the end of the day kind of draws near. Because we've seen stocks that jump and run throughout the day, and then they pretty much give back all their gains on the back end of the day. The last, hour or so, 2 hours, an hour, 30 minutes, it started to give back its gains, right? Now, even at that moment, you say, okay, well, that's, people take a profit. Well, okay, that's fine and all, but you don't need to hold through that just to prove, that, you made a good decision in picking a stock, number one, but number two, that you just know it's going to have some follow through the next day. Again, that's just not smart trading, right? Especially not smart day trading. And so, again, if you're not value investing, knowing out the gate that you're going to swing trade because you front loaded the position, a lot, earlier ahead of the time, then it's just not, again, a good decision to hold on to a bad trade just because it seemed to be, a good company. You like the CEO, the news they put out kind of triggered you. You're saying, oh man, this is a good company, this, that, and the third. That's just not smart, right? So, again, we don't want to make moves based upon that kind of mentality, right? It's just not smart. It's just not smart, right? And so, again, we want to make sure, again, that we're smart and make good decisions. So swing traders usually look for stocks and solid companies that they know won't lose their entire value overnight. Again, talking about these penny stocks, right? The pump and dump section, right? Stocks that you can't necessarily quantify through previous chart history, previous price action, previous fundamental values and counts that the companies obviously have proven that they are solid company, and they're in the growth phase. Balance sheet values that they're good at keeping their debt to equity ratio kind of balanced out. They're not heavily leveraged in debt, right? They're not constantly battling other companies within this particular sector of space to the point where it's lessening their market share value more and more. Again, they have to be able to compete like anything. It's like a sport franchise, right? You typically want to find those teams who are solid in their level of competition, right? Because they're doing all the basic things right. Again, going back to those basic things, right? Understanding a very rudimentary aspect of trading is understanding how to be disciplined in some very fundamental things. And so, again, having this kind of conversation what we're having today, it's just that it's a re-engagement with understanding some very basic principles in terms of what values of trading might be more useful for you, right? Everybody's schedule is different. Everybody don't have time to sit in front of the screen all day, right? You got things going on. right? And so, it may be behooving of you to sit still sometime and say, well, you know what, I don't want to get caught up in this FOMO. Let me take a more, methodical approach, and let me say, I'll wait to see how the stock, performs throughout the day, and I'll take a position at the end of the day, the very end of the day, right? Because in that moment, that will give you some indication, how excited were these investors for this asset, potential for a follow through the next day, especially if it had been kind of sitting, dormant for a long time, if it's worthy of the trade, especially if you missed it earlier, basically what I'm saying. And so that goes back to, again, speaking about this called supply and demand value of, certain zones or loading zones, as I like to call them, for trades, right? So again, that's something I've just been speaking about for years now at this point, support resistance, supply and demand. When is a good time? When is it not a good time? Did you miss the bus, or was you at the bus stop early? So you can get that good choice seat on the bus, right? No one wants to ride in the bus and sit above the tire, especially when the driver hits a bump. Everybody go flying to the roof, right? And so again, a lot of it's just like trading, right? A lot of turbulence, a lot of what, bumpy rides, so to speak. So again, in those moments, you want to be, again, cognizant of that, so you don't get caught holding the bag, right? Or you don't get caught, in that turbulent aspect of the market where you're fighting, how to be a more secure trader. Somehow my connection is very, man. Can you guys see me clearly by any chance? I don't know if is it clear? Because it seems like I got like a little fuzziness on my side. It might be the internet. I know we've had a lot of rain lately. But can you guys see me clearly? Was you guys able to see my screen clearly? I'm sorry if it's not. Even I know I'm speaking, but I want to be able to have it up there where you guys can see it clearly. So, in any event that you have, you couldn't see that, I'll make sure I post that particular thing as well, right? So you don't have to, fight through that, so to speak, right? And so we'll make that very, visual for you guys, so you don't have to fight through it, basically, what I'm saying. So just want to put that out there. All right. So again, moving on here to like I was speaking about in terms of these supply zone, these loading zones, this, that, and the third, right? So that way, you'll kind of have a more, I would say a more comfortable position when you realize, are you hitting a peak level of support? Are you hitting a key level of what resistance, right? So going back to what we speak about earlier is that, being disciplined enough to kind of sit on your hands, and other times when you probably need to kind of go ahead and pull that trigger. The basic core principles, again, what, why, when, and where. If you can't answer through those questions, don't take the trade, right? So again, speaking about that, right? Speaking about those, right? Those so-called, support resistance, those supply demand zones, this, that, and the third. Coming from a place where, when we think about, institutional holders and banks, right, and how they, trade the market one over the, one day over the next, and suck in a lot of retail traders, right? Because it's easy to kind of get caught in the mix of a trade, again, if you come in late to the party, right? And so what we realize in that moment, throughout the intraday charts perspective, let me see if I can find this one chart here. I pulled it from a Forex chart. It's a supply and demand zone based kind of trading, technical analysis, but it goes, hand to hand with any kind of, value of trading. All right. So yeah, just sit here. All right. So let me see if I can pull this up here. All right. So, all right. I think we're good to go here. All right. So let me just share my screen again here, and we'll rock out here. All right. 1 second. Okay. Yep. All right. So yeah. So again, speaking about that from that perspective. So let's go here. All right. So let's share. It's not going to let me do that. Okay. Let me do it this way. Okay. Great. All right. So again, moving averages, supply and demand, right? So kind of going back what we're speaking about, right? And so loading zones, right? So what are loading zones? Loading zones are areas where you have heavy accumulation, right? Right, and then you have a moment where it channels out, right? You have a bull flag, or all the different patterns that are out there to kind of give you some indication that you are in a consolidation or accumulation zone, right? Before potential what? Breakout, right? And the only thing that's necessarily missing at that point is what? Adequate volume or a useful catalyst kind of catapulted out of that area. So going to this chart here that I have up here, if you guys can see this here, right? It said moving averages and supply and supply and demand. Now we know moving averages offers a great indicator to help you, right? But one thing I've definitely realized too, even in this aspect of using moving averages, sometimes moving averages give you a late indication, right? And if you're smart enough to read, be able to read the tea leaves properly and get ahead of the trade before it unfolds based upon previous chart history, based upon accumulation, based upon consolidation, based upon a bull flag, this, that, the third, right? You can get in a little earlier and not, be caught somewhere in the middle of the trade and not necessarily get the best profitability perspective that you can get if you front load it a lot earlier. Again, going back to potential swing trading as opposed to day trading. Day trading happens when the stock is already broken out, because then that's why everybody's there. It's a hindsight move, so to speak, if that makes sense. You're coming in after the fact, right? Unless you were so fortunate to catch it, before anybody else, and then the volume came in, and next thing it's a firestorm. But typically, day trading is obviously coming, from an aspect of when the stock is already broken out. And now at that point, you're just trying to make sure you chart properly where the stock is at from that, that moment of the breakout, and if there's any move left in it, or room left in it where you can get some profit out of it, right? And so again, you're coming in after the party, but realizing that, if you can see here on my chart here, see if I can stretch this out a little bit here. All right, if you can see right here, this loading zone, so to speak, right here, right, where the market obviously you had to cross over, somewhere around this point here, this 335 level here. Obviously, just looking at the time slot down here, not necessarily that it matters or not, but we're just saying, you look back at the previous chart history and saw that the stock was consolidated in this little tight zone here, right? Roughly about let's say about a 2-hour window, right? Looking at this little time frame of this thing, about a 2-hour window, just a lot of consolidation going on in this little zone here, right? And then you had a gap up, right? And this particular probably was a follow through, right, to the next day. I was just going by the chart, but we're going to hypothetical our way through this here. Just you kind of see what I'm saying here. So when the indicator came down and touched here, obviously it was bullish because I'm guessing, let's say that's the 20-day moving average and the 50-day moving average, right? And so when the 50-day moving average crossed over the 20-day moving average, right? When the red crossed over the blue, that's when the stock became bullish, right? And then you can see right here in that moment when it kind of got to a point of resistance here, and it kind of tracked out sideways here in this consolidation level. And the 50-day moving average came down and touched the 20-day moving average, right? It didn't necessarily cross underneath, it just touched it ever so slightly, right? And then basically what happened is more buyers stepped up in that moment to show that the price action was true and exact, and it kept the 50-day moving average obviously on the upward trajectory, and it crossed, or as it got back above the 20-day moving average ever so slightly, came back and touched it again. You had a small little pullback, but it didn't break the low of the support zone within this channel. That in itself gave you an indication that, okay, this stock is still bullish, right? And if I was thinking about swinging this trade, going to the next day, let's say that the end of the trade day, ended at that point, I would say, okay, it held this value pretty well in this channel here, actually, and presented a higher low, coming from where the stock broke out of and got above a key level of resistance at this line here, right? So in this moment here, when I go back and look at this channel, if I put this on the chart perspective, this actually presents itself as as a demand zone. The buyers were coming in, right? And they held their position, and they didn't all kind of run for the hill, because in relation to that, you see where it held this support line when it broke above this key level here at this point right here, right? And it stayed within a nice little channel. Now, not knowing whatever this ATR is in terms of price value, but just knowing it stayed within this channel pretty well, that lets me know this is a loading zone, which we call it a demand zone, right? Where the demand is starting to pick up, it's starting to increase, right? And so this becomes more of a swing trade perspective in this zone. Then when you get up in here, it becomes more of a day trade, if that makes sense, right? Because now it has broken out. The next day is open up, it gaps up, right? Now, you know, the price action comes in. Look at this big bullets engulfing candle, right? This is what day traders are looking for. This is what scanners are picking up from an algo perspective in terms of all the metrics, right? This at this moment presents a day trade, right? It presents a day trade. And so in that mindset, you would trade it exactly as such, right? You don't want to come in and you know, and be late to the party and say, oh, this is a great swing trade. No, trade it until it presents you something different to kind of what, get excited for, because at some point it's going to have a pullback. And just looking where it came from, right, to where it's at now within this kind of zone here, this presents a great day trade. And so again, you come in, you know, wherever you get at some point when you kind of, you know, chart a new support resistance line within this breakout zone. Let's say you buy the first pullback, right? Because you already know, you know, first pullback on you know, when the intraday chart opens up, right? It's typically when you're supposed to get you know, a new, you know, thrust of volume to come in to kind of catapult the stock back up, right? You don't want to buy it up here, knowing that the stock is already extended on the RSI off the daily morning craze spike. You want to wait for that first red candle to happen. So again, when it pulls back to a point and pivot, right, which it did right off this indicator right here, this 50-day moving average, was obviously just let you know this became a new support zone. And then the buyers came in, and obviously we had a volume bar here to show that, you know, volume stepped up again and came back in. So typically right at that point there, you had an option to buy in here at this point here, or wait for the confirmation before it breaks above the old previous high and presented what, new high of day, which also lets you know at that point then it's aggressively bullish. So you're either going to buy here or you're going to buy right around this area here, right? And so in that moment, that's your your intraday breakout zone to be a day trading this stock, as opposed to trying to think about even thinking about swing trade at that point, because now you're caught up in the flow of the price action. And so again, the stock breaks out, goes up, hits some key levels of resistance. If you're not taking partial profits at these kind of big pivot zones right here, you just may be holding to it, kind of hits a big wall, but at that point you'll be able to kind of know exactly where you are in the trade in terms of your profit value, right? And so as soon as it hits the key level of resistance, the stock begins to keel back over, gets it to a new level of supply zone, so to speak, now. Because now you're in a point where it's just overextended. And so it's exhausted. The banks have bought a lot, retail traders have bought a lot, and now you're checking your RSI, you're checking your MACD, you're checking your statistics, you're checking your linear regression band, you're checking all your different indicators to let you know exactly if the part is over or not, right? Because now it's like, okay, we got we had a good time, it's time to go home, right? It's time to go home, get your little keys and and head for the door, right? And a key indicator here to let us know whether or not we're done is with the 50, your moving average. The 50-day pretty much at this point crossed back under the 20 moving average, right? Which it did ever so slightly, and the 20 average kind of crested up a little bit, and then it crossed back, and kind of converged with the 50-day moving average, kind of correlated with it for a little while, and then again the 50-day moving average crossed back above the 20 when new buyers came back in and it pushed it higher. So again, when you're looking at this chart from a day trader perspective, again, the money was made between here and here. And so obviously what you want to do is trade smart. You want to start taking profit between here and up here, right? And not just hold it back just because it seems to be a good trade. And so this is what I'm talking about here when you get caught up in, trying to guess your way through the market when the market's kind of telling you from level 2, and everything else, the indicators just at the third, that it's time to kind of take your bag and run, wait for the next loading zone to happen, right? And so again, what you see here is an opportunity here where the stock began to consolidate again sideways before it broke out and kind of went higher, right? So again, made for a new buying zone, right? So within this same level, as we always know, old resistance becomes new support, and that's basically what happened in this moment, right? This new level of that old level of resistance became a new level of support because the stock channeled out in this zone. It held its gains pretty well, and then they sort of then break this level of resistance here and kind of fall back under this in this day trading zone. It held pretty well there. So taking profit here, loading here, became bullish again when the 50 crossed back over the 20 moving average, and obviously opened up another buying opportunity, right? And so again, the stock went higher, right? And so again, if you just playing this from pivot point, again, right when the 50-day moving average came close to this 20 moving average and crossed back underneath it, that's another that's another sell zone, right? That's another sell zone. And in this moment here, if you're not necessarily comfortable in just, going back and forth in intraday trading, back and forth, you're pretty set for the day, right? You pretty much made more than you need from a day trading perspective, to the point where you don't just have to risk it just because you can, right? And so I guess, again, in that moment, this is when you kind of say, well, let's let the asset kind of, cool off a little bit here, and we'll see if it's worth, probably swing trading it until the next day if it's going to hold what price action pretty well, right? Because you're done, pretty much you're done at this moment, or you might be still in, you might have left a few shares in it, because again, it didn't break this key level of, support down here. You may hold a few shares to kind of see if it's going to go higher. That's fine then too, right? And that's just smart if you already got a pretty decent size. You got a few shares left. You already kind of locked in some profit. Okay, in that moment, ain't nothing really kind of saying get out of the trade, because it didn't really break any key levels of support where the loading zones were that you was able to see through level 2, through the indicator, through the oscillators, and then these kind of demand zones, to the point where it's just not kicking out of the trade, right? And so basically what happens is you got a person that comes in pretty much on the back end of the day, right? And they're saying to themselves, oh, this stock was on fire. Oh, I'm gonna swing trade this, right? Oh, I'm about to swing trade this, right? I'm gonna hold this, or the person that was, that came again late to the party, and they're starting to buy in, up around, probably here, right at this zone right here. They might have bought in around this area here, and then guess what happens? It plummets all the way back. And then during this drop here, guess what the person doing that bought in late into this party here, right? The person that thought this was a good swing trade started doing. He bought in here because he's like, oh, this is gonna be a good swing trade. This thing gonna run another day. It starts dropping on him, right? And they start to panic now, anxiety kicking in. They start selling their shares off into this dump, because they failed to realize that the loading zone to really buy this was back during the beginning, the latter part, of the previous day, when the loading zone obviously presented itself as a more surefire value of a particular swing trade, because now you're going into day 2, maybe day 3 of the breakout, and now starting to get exhausted, right? So you missed the opportunity to really get a good loading zone way back in this area here, and you're starting to buy in way up here. That's problematic. So it dumps and gains back pretty much all those gains it made, comes all the way back to that same demand zone around here, which always at that point began to show you at this point that's where the good level of support was at, because it came into this area, broke into it, and it bounced, right? Bounced up out of there, shot up and went a little higher, crossed over, right? You had the 50-day move, crossed back over the 50 there, right? Got a little extension on it, hit some little key levels there, old support resistance lines. You can chart that probably at that point. Came back again, consolidated, chopped out sideways, and went back, got a little, little steam in the back end and went higher. But basically at this point, now coming from the high of day, or the high of the breakout, now you're starting to present lower highs, right? Because it's now starting to show that the stock is on it's exhausted, and you had what you call a spring action, right? The rubber band action, right? You had like a little, expansion or contraction, right? Off this big drop. And then you had like a nice little expansion where it kind of reverbed and kind of gave you a little shot back up a little bit, but it probably tailed off there and kind of pulled back at that point, because the great part of the move is already it's already done, right? So again, just understanding some basic levels of understanding support resistance or supply and demand zones, and or understanding what's a good swing trade from a good day trade, right? And so if you're going to be a good swing trader, then you have to be able to, have great technical analysis perspective. You have to be really good at going back and look at previous chart history, because, you don't want to get caught, buying into a supply zone when ain't nobody else there to buy. It's not a lot of good money coming in there to kind of really sustain it. Now you may still get a 2%, 3%, 5%, 10%, pop bang. Depends if you caught in at a good level of support. But outside of that, it's not really worth holding when the meat of the move, when it came from way over here and got extended way up here. It's just not a good opportunity to be trying to buy this and take this any longer. You know what I'm saying, at that point, because obviously at that point, the volume probably be thinning out at this point. It's starting to show you that, people not necessarily holding it, in big volumes, because you're starting to see, big shares being, sold in the after hour market. We're looking at level 2, all these kind of things are happening. Those are key indicators that let you know, hey, this part is about over, right? And so the smart trader will say, I'm gonna take my profit and I'll wait for the next opportunity to get back in, right? And so again, the smart trader say, I make my money between here, right? I make my money up in here. I make my money up in here. I make my money up in here, and I make my money up into the high day, right? And at that point, I mean, that's a big move from here to there, right? And so you extend it at this point, right? I'm out, I'm out, I'm good. All right. Let's see how it closes. Let me know if there's any kind of worthy value that it may get some more move, more meat on the bones the next day. Right. And so again, in that moment, you're just saying, let me see how it performs, how it closes to let me know if there's any more meat on the bone. So again, you see it sold off here, came back to that key level of demand zone or that big level support. And then it had, a nice little spurt from there, picked up a new, some new buyers, and then kind of went up higher. Right. So again, just something to think about when you're trying to quantify whether or not a swing trade is more, credible than a day trade in moments when the stock is already broken out. So after the stock is already broken out, again, it becomes a day trade, right? Before that, it's always a notable swing trade because, again, you're front loading in anticipation that, news may be coming, FDA, clearance or something like that may be coming out of the pipeline. You kind of plan for this day, and you go look some of that stuff up. Some of these stocks are so, transparent. You go to a site like a Biopharma site, I think it's called Biopharma site, whatever, where they're telling you that these are the dates that, that we got, that's coming out where, this news is going to come out on this stock, right? And so in that moment, you say, well, hey, this might be the opportunity to front load, right? And, play the weak, the weakness at this point, and, hopefully some strength to come along and present this as a good day trade, right? So again, more opportunities to kind of, really begin to position yourself and figure out, what kind of trader you are, right? And so again, I just want to capitalize on saying that because we'll get caught up again in the FOMO and then we buying in too late. We get to buying in too late, then it can be problematic, right? Because again, we didn't take enough time to go back and look at the previous chart history. So case in point, all right, I'm gonna go to this chart here. This is CRM, Salesforce, right? They got earnings Tuesday, right? Let me share my screen here. Excuse me. They got earnings this Tuesday. Hold up 1 second. I doubt it. Okay, yeah. Okay, here we go. All right, so let me share this here. Oh, let me see if I can do it the other way. That way I can get the full screen. All right. All right, so in this moment here, right? So just looking at Salesforce, right? Again, they have earnings this Tuesday. All right, now looking at this stock, again, it's just this stock has been on fire, right? It's one of the premier cloud servicing companies that are out there, right? We know there's many of them out there. You got Splunk, you got Palo Alto Network, you got Microsoft, you got the Trade Desk. I mean, there's a lot of different cloud servicing stocks out there, right? Well, when we talk about best in breed, right, and we say personally, well, it's best in breed, meaning this is the type of stock where it quarter over quarter just outperforms a lot of its competitors. Then obviously in that moment you can say it's the best in breed reality, right? So looking at this stock here going all the way back to 2017, right? When it really broke out, and I'm saying that because when you go back and look at from the previous chart history, go back and look when the 50-day moving average here, or excuse me, the 20-day moving average here crossed over the 200-day moving average, right? Right, which is really really huge, right? All right, and so when that happens, then it's game on, right? It's really game on. And obviously, if I put up the 50-day moving average, you'll see the incremental breakouts. But I just have the 20-day moving average and the 200 up on this one here as just this little chart, this chart, little depiction here. So again, it crossed over here around February, right? February 2017, and after that point, the stock just was on fire. And notably so, if you look at it from a yearly perspective, even though 2019 is only the first 2 months into the month, basically that third, you can go back and just look at the previous chart hits from 2018 to 2017 and give you a good indication, right? It's about a 2-year span, but either way, you see that this stock has been highly on fire, and it's been riding the 20-day moving average, nicely. From 2017 to 2018, it wrote the 20-day moving average this very beautifully, right? didn't have any kind of major pullbacks to the point where, you know, it would cause a person that's value investing in this stock to kind of get out of it. You know, so again, great opportunity, but to see this as a what? As a bullish trade. And then the earnings report, you can go back and look at the different earnings, see if they beat, did they lose, or just that, the third. And as you can see, you know, the stock, you know, had a great history of what? Beating its earnings. Again, it began to command a lot of, you know, respect amongst its peers as a viable what? You know, competitive force. You know, the mergers and acquisition things that we also look at as another key sign. You know, again, just earnings after earnings, you see how it's just beating earnings, right? It beat, you know, beat here, beat the other one, and just kept going higher and higher, right? Now, if you look at the stock from an all-time high perspective, because this is at its all-time high, look at the chart from the previous chart history, right? Now it becomes, you know, a thing of, okay, now is the stock exhausted or could it go higher? Now, easily, we could defer to the latter and say, yeah, it could easily go higher because look where it came from, right? But when we start to factor in a lot of the other things that are out there, you know, and I'm going somewhere with this in terms of day trading and swing trading, right? Because the day trader, if you're day trading this, you know, day over day, and this is the daily chart that I have up, obviously, in terms of daily, you know, daily candles. All right, let me zoom in on this here, right? You know, if you're day trading this day over day, again, you at this point you're looking for key what indicators in terms of the candles, right? You know, dragonfly doji, shooting stars, you know, inverted hammers, all these different things where you show trend reversals, and from that perspective, you can kind of say, okay, well, maybe a moment to kind of what get ready to kind of trade the opposite direction, or it's gonna keep breaking out, right? In terms of, you know, day trading from swing trading. Now, anytime you got these big bullish, you know, green candles in the day trading perspective, right? These are, you know, obviously moments where people are day trading it, right? Or they're thinking about taking it long, you know, based upon, you know, they think this is a great company to invest in, or it may not be. Now, I'm saying all that to say, now that it has earnings coming up here this Tuesday, this is going to make for a very what volatile stock, and it's already at its all-time high, right? And you start thinking to yourself, can it go any higher at this point, right? Let me squeeze this down so we can pull this up here, right? Can it go any higher? And looking at the options market, the option market is already baking in, you know, about a 7% move at this point, right? So 7% either to the upside or 7% to the downside. And as you can see here, I've already got my 7%, you know, not necessarily 100% accurate 7%, but my 7% zones already kind of marked here on this chart. And what you see within this red band and this blue band are what I consider to be, you know, supply and demand zones, right? Front loading positions or extended levels of the trade, right? And going back, you know, in terms of, you know, the earnings value, right? Going back to this earnings point, I should have just started here and just condensed it here, but it doesn't matter. Looking at it from an earnings perspective, you know, this earnings right here, you can see where the stock obviously, you know, had a nice little what, you know, kind of pullback. Well, it jumped up on this earnings report, then it pulled back afterwards a little bit, right? So again, obviously there's some weakness there, but it rebounded pretty nicely, right? It held a key level of support, and then it kind of what shot up and went a little higher, right? So obviously it kept this trend, right? It just offered up a nice little low zone and went higher into this next potential earnings, you know, earnings pivot point. And then it pulled back here in this kind of ABCD pattern here at this new high of day back in October. All right. And so after that, it sold off very nastily, right? So whatever it caused to sell off at that point, you know, that was a key indicator that, you know, the stock obviously had hit a point of what, you know, extreme, you know, overbought value on the RSI. You can look at it even from the RSI here. At the key level, there's still, it was kind of pivoting around that what overbought scenario there, and it was due for what, a pullback. Now I don't know what really caused for the pullback this far. I'm sure we can go pull the news and figure out what it was. But either way, it pulled back all the way down, right, from this big move, retraced all the way down until it's what, man, let me pull this up a little deeper here. As a matter of fact, let me do this here so we can really see here. Until it had its next earnings report back on what, November 27th, right? After having a nasty pullback, and then it gapped up and went higher. So they must have beat on their earnings. Obviously, at that point again, stock has a history of beating earnings. If you go back and look, Again, you can see here this clearly, having some moments here where it was doing pretty good. Actually, it had a better here than it had spent on August than it did back in November, right? So apparently the stock got exhausted, right? It was starting to show some points of what fatigue, basically what I'm trying to say, I guess, right? I know I'm babbling a little bit here, but I'm just walking through a little bit here. And so this became obviously an obvious supply zone where you didn't have any more, high demands of buyers coming in at this point, right? And that's why I had that bar set up there because, dang it, man, move my little pivot points out of the way. Right here, right here. And in that moment, that's when you begin to have that moment of fatigue, and it got exhausted, and then you had this little pullback here, right? And it gave back some of those gains a little bit, but not a lot to the point where it's just like, time to run for the hills. If you're a long-term investor, right? It pivoted off the next earnings again, back in November. It did pretty well. Obviously, it gapped up. And then we had the inevitable, the December sell-off, right? The pullback with that December sell-off with everybody else, pulling back as well. And then the market, pivoted again, right? And then it went, sky high. So basically from this point to where it's at now, which is at its all-time high, right? That's a very big move, right? You're talking about 7%. Let's say another 7%, 14. Let's say another 7%, right? 21. Let's say another 7%, right? You're talking about 28. So it's basically up about 30% off its December lows, right? So it's pretty extended in that little short period of time, right? And basically what you see in that moment is you see more green candles than you see red candles, right? You got 1, 2, 3, 4, 5, 6, 7, 8. 9, 10, 11, 12, 13, 14, 15 red candles and a host of green candles, right? Right. So again, a lot of aggressive buying, right? Now, if you're coming in this and saying, well, hey, I think this is a good company, man. Look where it came from, right? This is a good long-term investment, right? It's got to be, right? Because it's the stock is on fire, man. And and I'll be like, well, okay. Right now, maybe it's not the great time to take the Warren Buffett approach and say, oh, you want to go long here because the stock is very extended. Look at the RSI, right? Look at the RSI. Couple that with the ideal that we know that, 2019 is supposed to have slow GDP growth. A lot of companies starting to revise down their guidance reports, right? And so now it's not necessarily good to be trying to buy stocks for the long-term haul, right? For the long-term, move. At their all-time highs, right? 52-week charts are not necessarily stocks that you want to be looking at and be trying to go long in this market. And we still don't have a lot of clarity on the China trade deals, even though it may affect the company a little bit, but it does because it's dealing with cloud storage and the different components that obviously make up their infrastructure to be able to kind of offer such a service, right? They still have to buy computer processing, chips and things of that nature. So the semis and all the other stuff that make up their company. Then you can go, obviously go more in depth to kind of figure out those things out. But I guess what I'm trying to say at this point, the stock looks like it's very extended at this point, right? Going into its earnings, right? And it's a very still bullish, aggressive sentiment left into the stock. But I see a stock that's, in a peak point here where it's kind of it's starting to show that it's pretty exhausted at this point, right? It's pretty exhausted at this point, right? And then you got to almost like a dragonfly doji up here that it closed on, back on the 1st, right? Going into the potential, the next day, that could be problematic for potential bearish reversal value, so to speak. All right. So again, just learning how to spot these different loading zones, one over the next, could be very useful, and you realizing whether or not if it's a good swing trade, if it's a good day trade, or even if it's a long-term investment, depending on where it's at. So someone came in and said, well, hey, do you see this as a long-term investment at this point? I'm like, well, not at this level. And right, I don't know about in their right mind when we buy this long as a long-term investment this high off its December lows, where the stock is up near 30%, almost in a straight line. And we say this, from an investor perspective, we'll look at this almost like in a straight line perspective, right? That's just not, a good investment, for a bigger move to the upside when you could definitely get this thing a lot cheaper, right? Again, you're not going to walk into Walmart and pay, $8 for a bag of cherries when you typically, they're sold at $2 or $3 a bag, right? You must really want them cherries really bad to want to buy in that for that price value. And so it's the same thing when you're day trading and you're swing trading. Why you want to buy a stock, that's up, already 10, 20%, off its breakout pivot point, when, typically you can probably obviously get it a lot cheaper. You see what I'm saying? And so it's the same thing, when understanding if it's a good day trade or it's a good swing trade based upon, how far it had moved. It has moved off its low points of support. When all this new, volume was coming in, or as consolidation was happening, all right, and then again began to show that it was, getting ready to get some, a nice little breakout, which you see here in this blue zone, when it broke out after pivoting off the December lows, right? It began, to show that it was this is the new candidate for potential nice little trade, a swing trade at that point, because it broke out of that demand zone, right? And in this case, it kind of it didn't really last, and stayed in its zone long. It just pretty much, was on a tear coming off the December lows, and at that point, everything was just going long, right? So again, you was trading, the geopolitical news and the sentiment of the overall market at that point too, with some of these trades that was taken. Case in point, stocks like Nvidia, right? Nvidia just went crazy. Netflix went crazy, right? And so again, that stock was up well over dang up 50 or 60% off its December lows, right? So again, in moments like that, you just say, well, dang, how is it plausible for a stock to be up that high and not necessarily pull back at some point, or hit some key levels of resistance before it pulls back? And so that's why it's important to, again, realize, how to chart stocks properly. When do they seem to be good loading zones, and when they, appear to be great sell zones, so to speak, right? And in that moment, you realize, hey, right now is not the time to be trying to swing trade this, and it's more of a day trade, or not. Right now is not a good time to be trying to day trade it, and it may be just worthy of a good swing trade once, I see that, there's a good opportunity to kind of front load it and take it higher. Again, these are swing trade zones, right? These are also day trade zones, again, you can kind of pivot day over day, kind of, see where the stock is at. But again, either way, you're just trying to make sure you know how to recognize those opportunities, right? And so that way you don't get caught out there, buying a stock that's overextended, and get caught holding the bag, so to speak, right? And so again, this is one of the stocks I'm looking at. That's why I put it up. It probably wasn't the best example to give at this point, because again, where the stock is at is it's just brutal in terms of hitting the all-time high. But just looking at it from that, what we're talking about, as far as these opportunity to kind of see loading zones as opposed to supply zones. Again, these are just artificial in the aspect of where this stock has came from, because again, you will see that down here off these pivots would have been more a buy zone, or a demand zone after the December lows, and it broke out and went higher. But I just blocked it off at this point here. I was using it as an earnings perspective, kind of see where it was, doing this earnings report, and see how I kind of channeled out a lot of this trading action was kind of stuck in this little ugly area here. All right, this is artificial, right? Because we know what happened during those moments when the market sold off in December. This was more of an indication of where it really was kind of trending out at in the zone before it broke out, right? Because you have a big, big old, candle up here, and it pulled back within the zone, kind of pinged around inside of it, right? Got back under the December lows after it sold off, got back in the zone again, then it broke out here, the tip of that, and got above it finally, and broke out and went higher, right? So in my mind, again, this was a more key indication of a demand zone, regardless of the fact that you had this artificial sell-off in December, which obviously it bounced and went higher at that point. So you'd have been buying it at this point here, basically, within this range here, when it broke out above it, went higher, that's your buy zone. And even more so, looking at, how, again, we saw, a lot of volume coming in down here, and these, big green volume bars down here, showing that a lot of buyers were starting to come into the stock as well, right? You had more green than red. That's a key indication that the stock was obviously getting ready to break out too, right? And so again, some of those things are obviously, you'll catch sometime, you'll miss it, but it's just another form of understanding how to, feel a bit more comfortable in the trade when all those things begin to line up, so to speak, right? And that'll give you some more, a surefire value or conviction that this is a good, good worthy trade, right? Be it again day trade or swing trade, right? So you don't want to miss the mark on those moments, and if you do, sit on your hands, right? You don't have to prove nothing to nobody. If you don't see it, if you miss the move, sit on your hands, right? Sometimes the best trade is the one that's not taken, right? Because again, you get a chance to what? See it happen and unfold. And if your predictions were right, based upon how you charted it, based upon the the fundamental analysis of it, that kind of give you some kind of insight of why the trade is kind of up and popping, news, whatever, then that's also a win for you, right? You may not get a chance, to actually get the the monetary gain from it, but you got a knowledge increase, a knowledge boost in that moment, right? You got a good, an assessment that you're doing proper, proper technical analysis, proper fundamental analysis, right? And so, again, another part of your learning curve, so to speak. You see what I'm saying? So again, just something to think about when you're, positioning yourself again to realize, if you are, more better at day trading as opposed to, better at swing trading. And sometimes being able to marry the marry the both and knowing when to day trade and when to swing trade in that moment. So again, I just wanted to kind of be able to, put that in perspective and some value where, you're not necessarily trying to compete, with everybody else more or less. You're trying to make sure that you're comfortable knowing, how to, focus on the market in terms of what you're capable of doing, right? If you don't have the time to day trade, then again, get better at learning how to read, charts from previous chart history, how to front load, and then you could be better at swing trading, right? If you, more focused on want to be better at day trading and you got the time to do it, then understand that smaller time frames are going to be like your best friends to understand how to, chart properly to be able to capitalize on those moments, right? And so, those are just some, again, many different facets that we have to kind of make sure we keep in mind, so we don't, again, overstep ourselves, get ahead of ourselves, so to speak, and, chase stocks, get a bad tip, again, in this market where you just don't know if it's going, Trump going to tweet or he's not going to tweet. I mean, all the things you got to think about, day or day, just becomes to be like monotonous, right? It's like, man, how do you navigate this? But again, it's better to know, enough to the tune where you can be disciplined in your movements as opposed to just guessing your way through this stuff, right? And then that's the difference between, again, day trade and swing trade as well, right? Because again, if you're kind of, coming in always late, to the party, then you may be better at swing trading, right? If you figured out how to front load really good, because I guess what I'm trying to say make a long story short, if you can learn how to swing trade better than day trading, than the thought of day trading, it'll make you a better day trader, if that makes sense. Because you get in the habit of, looking, beyond the breakout as a vantage point to learn how to trade better, meaning position your money better into a potential winning trade, because you went and saw key levels of support resistance. You saw the accumulation, saw the consolidation, you saw buyers coming in, and again, you premise that based upon news maybe coming out in the stock. You want to do a lot of due diligence on the company. You see that they got a lot of things happening, so you're playing the position that, okay, eventually this thing is going to break out, because I'm seeing a lot of good indicators, or good scenarios that this thing is obviously poised to kind of make a move, right? And so when it happens, the breakout happens, then you're kind of already on top of it. And then new traders come in, new volume come in, next thing you know, boom, saying the stock is pushing higher, right? And so basically at that point, you're gonna dump your bag off to to the person that's gonna be buying at the very top, and then let them take it, take it wherever they want at that point. After that point, you're done with it, right? The party's over, so to speak, right? And so, again, just something to kind of put in perspective when we're talking about day trading and swing trading, and knowing exactly where you fit in, excuse me, in the grand scheme of things. And you know, and you're not finding yourself out there chasing, chasing fairy tales and chasing a market that just necessarily, giving you a good, vantage point to be able to kind of get into it, at the right levels, so to speak, at the right positions at that point. Right. And so again, I just want to touch on that briefly, and knowing, what kind of trader are you? So if I was to ask you guys, what kind of trader are you? Are you a better swing trader or a day trader? All right. And most people, I've had people, just say, well, I think I'm a better swing trader. Right. And then I say, well, okay, can you quantify, your win to loss ratio in a way that proves that that you're better at that than doing, trading, from a day trade perspective, right? Notwithstanding the fact that you may have a busy life and you can't day trade all the time, but if you take the swing trading approach and you're not necessarily able to kind of, obviously, be profitable at it, then there may be a room where you need to become a little bit more what, discipline in the value, how you go about in your swing trading practices, right? You may need to be better at technical analysis. You may need to be better at the fundamental analysis aspect of it, right? And understand the investor sentiment. All these different things that are factors in what it takes to become better at swing trading. You have to take all that stuff into consideration. You may want to be better at buying on the back end of the day as opposed to buying in at the front end of the day. In your essence of the swing trade, right? After the move has been made, how did the stock kind of end? How did it kind of finish out in the back end of the day, right? So in that moment, again, you realize that it might have been better that I just take a step back, assess the the overall aspect of what's happening here, and then make a decision based upon what the chart is showing me. What's the price actually showing me, and you're not kind of getting caught out there too soon, right? Right. And so again, that's another aspect of understanding, what you need to be focusing on as a swing trader, because there's a lot more into it than actually again, stock just breaking out, 20 crossover to 50, price actually picked up. Okay, it's on now. Then you just do your little support resistance line, and you just gotta play the price action to it, kind of get to a point where it gets exhausted. You get out again, day trade, right? Day trade, move on about your business, keep it pumping, right? And so again, that's another aspect of knowing that kind of that vantage point, and using it, to your advantage, right? And so again, let me see here. I got a couple little slides here, not necessarily slides, but just some pictures I pulled down in relation to kind of what we've been speaking about here. I'm going to get ready to shut it down a little bit too, because I got some more things I got to take care of real quick. But I plan on having another session. What I want to do again going forward here is maybe like 2 or 3 sessions out of the week doing the intraday side of the house, and doing real time trading with you guys, so we can be able to do this stuff in real time and see exactly what I'm talking about in terms of day trading and swing trading, right? When is a good time to kind of swing trade it? When is a good time to possibly day trade it, right? Because it's always different to try to speak about it in hindsight, because it's after it happened, right? And sometimes the best way you learn is seeing it in real time, when all these things are lining up, and then you start to see, okay, well, this is why I was in at the right time, or this is when I might have got in at the wrong time, right? This is when the banks were buying or the hedge funds were buying. This is when they start selling, right? Because we factor everything we do, so to speak, in relation to where the big money is coming into the trade, because that's what's really driving the stocks. Truth be told, when they buy, you'll know, right? That flux of volume is just like just through the roof. All right, so let me see if I can find this other let's see here. And I'm gonna post these in the room too, so you'll have them in the Discord some of these screenshots I'm talking about here, as far as, you know, loading zones, you know, offloading zones, and pretty much loading zones, right? Demand levels and supply levels, basically, so to speak, right? So you'll have a good, you know, vantage point of time to see exactly when it's a good time to, you know, consider, you know, potentially buying the stock, as potentially what you might be a good time to sell a stock, right? So I cleaned up some of my folders the other day, so I got some of this stuff all over the place a little bit. But I plan on putting it all in one big category, and having another tab inside of the Discord room where you guys can kind of go in there and kind of, you know, see these things as you know, ways to kind of see where you are, you know, in terms of looking at if this is a good opportunity to buy, if it's a good time to sell. You know, if you see a chart that's similar to these kind of diagrams, you will say, okay, this is why, you know, I was, you know, comfortable in making that decision, or I may not have been comfortable in making that decision. And I'll tell you what, since I did that refresh, I got all these things spread all over the place. All right, so, all right, oh yeah, this is one right here actually. All right, so this is pretty much a, you know, a moment, kind of like what I was talking about when I was showing that CRM trade, that Salesforce trade, where it was very extended, and, you know, it broke down out of that, you know, that zone. You know, obviously, you know, then it kind of, you know, hit a pivot point, then it went higher. So let's see here. All right, so let me share my screen again here. All right, so bear with me here a little bit here. I'm a little choppy tonight. Okay, yeah. All right, so again, just kind of speak about what I was talking about. If you look at this, this scenario here, where again you had this level where the stock was kind of pinging back and forth in this little, this little, you know, accumulation or the supply zone right here, right? You will see, and I'm saying this is a supply zone because obviously it, you know, it necessarily didn't break out. And the previous closing candle, if you look at this from a daily perspective, daily candle perspective, you saw that the previous day it gapped down, right? And as soon as you saw that gap down, I mean, it kind of gapped down, you know, at least, you know, below the halfway mark of the previous day candle. That's a turning signal, right? That lets you know at that point that there's a level of, you know, imbalance, obviously, in that zone, that the sellers began to kind of step up. They began to say, you know what, this thing ain't doing that. It's kind of caught in this little consolidation zone. It ain't necessarily breaking out, right? It ain't, you know, it hadn't completely broke down yet, you know, in this zone right here. But that following day, you had a gap down, right? And in that moment, you know, if you was thinking about holding this, you know, stock into a particular into a swing trade, then that wouldn't necessarily be a good idea, because now you're showing that there's a level of frailness, weakness, right? That you know, people are getting exhausted here, you know, waiting for the breakout to happen, and it didn't necessarily happen. And so now you got this big flux of people saying, you know what, it's time for me to get ready to roll up out here. And the confirmation more or less came right when it broke that the base level of support, right? Sometimes you may hear me speak about pseudo support. Sometimes you may hear me say, you know, this is a base support. You know, at this point here, this is your base support in this accumulation zone, right? And when you split the difference, when I'm always saying, you always split, you know, the top to the bottom, you know, that ratio of the bottom of the candle to the top of the candle, you split the difference of it. That becomes your medium line of knowing your top side resistance and your bottom side support. So if you close, the candle closes beneath that medium line, or that halfway mark resist, the halfway pseudo support level, so to speak, then that presents a very problematic moment where you might finna be in trouble and getting ready to break below your support level, right? And so now you got that halfway mark to the base support, you know, as a key indicator to watch if you're holding this position long, as you know, I'm not willing to give up any more more profits at this point, especially if you kind of got it ramped up and got into the zone. That becomes your level of it's time to head for the door. If it breaks below what? That key level of support at that point, right? And so now, excuse me, the trend has shifted, and it's no longer worth the value of a swing trade, right? Then you can think about obviously, buying options, buy some puts. You might want to be short selling at that point. If you're not short selling again, it may be a good time for you to just sit on your hands and wait for the next particular pivot point in order for you to kind of get back in the trade. And so as soon as that trend, again, was broken, that support was broken. Now, again, you don't want to be holding this, talking about swing trading this. You don't want to be, the last person to kind of cut the lights off, so to speak, after the trend at that point was confirmed and it broke down below that key level support. That is it's time to kind of pull back and get out of the trade, right? And so again, in that moment, this was a good opportunity for you to say, well, let's let it kind of, hit a new level or support to the downside before I think about potentially buying again, particularly for the upside, and in that moment when you had this level of resistance that it couldn't break out of, at some point, the stock may come back, and turn around and try to test it again, right? And so in that moment, you're just looking for, a better, profitability rate value or profitability zone, or a better risk versus reward zone than, getting kind of caught out there in extreme value and trying to think there's more meat to get out of a stock when it's already showing at that point it's already in the breakdown, right? This is not a good point of order, or a point of a good opportunistic area to be trying to buy long in a stock that's kind of trending out here, and then you get a breakdown then on a daily calendar, and it's showing you that okay, it's starting to get exhausted. The volume is starting to leave out, right? In that moment, it's just not a good idea to be thinking about trying to go long at that point, right? So let it pull back, let it consolidate, let it show you another buy opportunity before you begin to try to think about buying again, to test this upside, so to speak, right? And so again, just want to kind of, premise that as another kind of give another vantage point of knowing whether or not, it's worthy to be traded, from a swing trade perspective or more or less as a day trade perspective, right? Based upon breakdown levels and breakout levels, right? After the stock has already made a notable move, right? And it starts to get exhausted, right? Then it's, you may say it's time to take some profit because it ain't going any higher. Let me get out, let it kind of, consolidate again or show me a new pivot point. And then I'll think about probably taking it, taking again, long, obviously the previous day or, whenever it starts, it hits a point of bottom and bounce, and then I'll take it long at that point. All right. So again, just trying to putting a little bit more clarity to the idea of knowing, these key points. When that happens, that's when you want to start, focus on, buying it long, right? And in this case, going back to this chart right here, this sell force, wherever, the sell force, the CRM trade, you have it here when the 20-day moving average crossed beneath beneath the excuse me, the 200-day moving average crossed crossed back above, the 20-day moving average crossed back below the 200-day moving average, right? And then you had this kind of this pullback here, right? And then it kind of stalled out, it bounced, right? Then some volume came back in and got back above the 200-day moving average, even though the 20 haven't crossed back over it yet, but it was still showing, it still has some more fight in it, but it was still stuck in this zone here. See what I'm saying? So this began to be more of a, a proving ground zone, so to speak. Now, obviously, this is a big zone for stock trading at this multiple. You're talking about 134 to a top side of 144, so about a $10, $10 loading zone right there, basically. But again, just speaking of it in context to it being a potential good swing trade, as opposed to it being, a more of a day trade. Again, so in this zone, you see that it was kind of moving, pinging in and out of this little $10 zone, several times from the previous chart history to give you some indication, that, hey, this stock, maybe setting up again for another bull run at some point, even though it kind of pulled back, consolidated, broke down, and then you had an ugly breakdown in December. That was artificial. Obviously, everything sold off when the market kind of crashed back in December. But it showed that, beyond that, this was a key level, where it kind of chopped out inside for a good little, time span before it had got new legs again to break out and kind of, and go potentially set itself up to go higher, right? So in that moment right here, when the stock got back above the 200-day moving average, that in itself actually is a buy signal, because again, now we're going back to just pure indicators as a sign to say, hey, here's an opportunity to kind of come in, and take advantage of the potential good day trade and or swing trade, right? And the volume confirmed it. The RSI was in a good pivot point. And so again, that was a great opportunity to kind of hold this thing, for a particular swing trade, because again, it closed up higher than the previous, obviously a lot higher than the previous closing candle, but it was up, above the halfway mark of the previous, of the daily trading candle, so to speak, right? It closed up higher than it did, from the perspective where you say, well, this is the middle of the candle. It's showing some more bullish, sentiment still left in the trade. And so again, what it did, it broke out, gapped up, went higher. The next day, the following day, it gapped up and went higher again, broke above that zone. And after that, it was just lights out, at that point, in terms of, showing a lot of strength, going forward into the trade, at that point. So again, just looking at it from that perspective here, just one of many different things we have to factor in when we're looking at the market, and trying to strategize. If you think about, trading these stocks in the earnings, you think about holding them into, in a particular, catalyst come down the pipeline, so you can kind of, think about, is it a useful trade from a swing trade perspective, or is it, better just kind of wait to see how, if it's going to break out, if it's worthy of a good day trade. And so, stocks that have generally, a good, trading history in terms of how it performs, day over day, month over month, quarter over quarter, year over year, are always more suitable to look at for, potential, swing trade perspectives than that of trades that don't give you such a good, track record that is worthy, to be swing traded, at a point where it doesn't necessarily show you that it's good at holding its gains, right? A stock like this right here make you be like, okay, man, this stock is pretty strong. It shows to be a good, swing trade kind of candidate, just the way that it trades. Notwithstanding the fact that if it sells off any kind of anomaly or whatever the cause it would sell off, again, you can go back and look at the days when it had its moments of sell off and there's any particular news that caused it, whatever the case. But either way, again, you're just trying to find out, where is that in this aspect of being a good, formidable, day trade and or swing trade when the time presents itself, right? When obviously, when you're coming into the trade, saying if it's worthy or not, based upon the new, new price action, new catalyst, and this, that, and the third, right? Because a lot of times people sell the news a lot on stocks that are obviously, extended, and a person may see that, oh no, it's got news. This is good news, right? It's gonna go higher, but again, it may just be at that point where it's just overextended, and it might be a sell the news perspective more or less than just then it provides a good day trade, because again, people front loaded a lot earlier, and they was buying the rumor, and then they just sold the news, and so that's another indication of understanding swing trading as opposed to what day trading, right? Day traders buy the rumor, right? Or excuse me, swing traders buy the rumor. Day traders obviously get caught up in what in the selling of the news perspective, right? Because they're coming in obviously a lot later in the trade, right? So again, just want to again give you another vantage point again, like I said earlier, to think about it from that perspective, all right? And so that's a little bit just kind of just touching on those kind of key points of learning how to chart your plots a little bit better. Learn how to put it into more of a visual zone, so you don't have to sit there trying to strain your way looking at a chart just based upon the indicators alone. Throw you some blocks up there, right? Throw you some trading blocks up there. You can thin them out if you want to do it from a tight time frame perspective, right? And you can say, well, okay, on the weekly chart perspective, right? And say, well, just what it did in the last 5 days of trading, right? If we go back and look at this trade here, hold on. Okay, let me see if I can condense it. Okay, yeah. You go back from a weekday perspective, so you got 1, 2, 3, 4, 5, right? So these 5 candles right here, right? 1, 2, 3. Yeah, so right here, excuse me. So from a weekly perspective, you would say from this point to here, right? The stock obviously what went higher, right? And so that's a way to look at it from the weekly chart perspective. Matter of fact, let's go there. Let's go to the weekly chart. Hold up. Well, that's the day chart on the let's stay. Let's go the hour, and let's go. Hold up. Let's go. Let's give me the 5-day. I gotta squeeze this thing out a little bit here. All right, so I guess that's the yep. Okay, so let's say, all right, man, these red band is just odd looking at it from that perspective. All right, but either way, look, tighten it down. I got all this overlay in here, so that's why it's looking a hot mess. So forgive me on that. But I was trying to see if I can show you exactly what I'm talking about, as far as God dog it. Yeah, I'm gonna have to pull it back. Let's see. Okay, here we go. There we go. God dog it. That was ugly. All right, so yeah, just so let's see. All right, stretch it out, stretch it out, stretch it out. All right, so again, we'll make do of it right there. I'm sorry. I got this block up, this blue zone. I ain't want to just take it out right now because I'm using this chart actually for for earnings play. All right, so forgive me on that. So again, just going back to the 20 field, just say the 20 field, right? So basically, you got obviously the high at this point being this pivot around by 165. It actually hit a high of 166. Hit a high what 166 something. I forgot what it was. Whatever. But anyway, 165. We just say 165, and that's because it had a ugly wick up there. You probably can see it a little bit right here with this blue background stuff. It's kind of make it hard to see, but it had a high like 166 and a little change somewhere around there. It's not accurately reflected it. But long story short, again, when the stock obviously presented itself with a 20 cross back all above the the 200-day moving average way back here, right? Moving into this aspect of the weekly chart, anything within this little zone right here, I would say, when it crossed over, all this was a good opportunity for the front load. This was more of a demand zone, so to speak, at this point here, because again, it crossed over the 200, meaning the 20, and it chopped out once it hit a peak. That chopped out in this little area here as a load zone, and it held the support pretty well at the base of the support, as you can see on the bottom of this red line here. It held the support pretty well at that pivot point. All right, so roughly around about 160, about 160.50, right? And then it broke out and went higher, right? And so again, in that moment, this will be in my mind after I saw that it was kind of consolidating pretty well. If I saw this from going into the next previous I guess trading weeks, so to speak, right? This was a good opportunity to kind of come into this thing and say, okay, shucks, this is this is some good price action here, right? This is some good price action here, right? Meaning it's holding its gains pretty well. And then, lo and behold, volume came in. So look at the volume spikes on days that, when it really broke out again. It broke out and went higher, gapped up again, broke a key level of resistance around 161, went up at a high around about 163, trapped out again sideways, presented what? Lower highs, higher lows, coming off a point where, where it came from. And so, again, hindsight 2020, you see it now, but all the indicators at that point showed you that it was still in a bullish uptrend, because the 200-day moving average kept, obviously what, trending higher and higher. It kept trending higher and higher. So being able to see that at a key pivot point where it crossed over, the 20-day moving average crossed over the 20, that lets you know here's the opportunity to think about taking it for a swing trade. And this is a more obvious perspective, because again, that's a very bullish signal. So if you new, to that understanding of knowing how to, look at your your indicators properly, meaning your 20-day, your 50-day, or your 200-day. This was a key indicator to let you know at this point. Here's where you want to get serious about probably taking this trade, for a nice swing trade, right? Until it proves you wrong, or any aspect where the trade is telling you, it's time to head for the door, because now you got an indication where it's pretty much solidified that this is worth the value of a good swing trade, right? And again, just another way to look at it from that perspective. You look at the weekly chart, you look at the you look at the day chart, then you look at the weekly chart. A lot of things within that will definitely give you some give you some confidence knowing that here's a good opportunity to kind of play this trade for a long-term perspective. Obviously until it kind of kicks you out of it, but you hold it until it kicks you out, until you get that moment where all the profit that you can get out of the trade is obviously tapped out, and then you go and take what's in there, and you head for the bank at that point. All right. So again, just want to kind of show that from a point where you just start, when you see that key indication, it's time to go go long or get long on a stock, then you can take that take that as a swing trade perspective, as opposed to trying to fight the market day over day and try to trade the pivot points from a day trader perspective, right? Because again, somebody that took this trade up here thinking it still had more room in it because it gapped up so high, right? And then it pulled back here, a little bit here on this dip, right? And then it kind of regained itself and came, presented a pretty much at that point, a pivot point or a lower high. It pulled back, gapped up and got back over the VWAP, went up there and tested the key point of resistance at this point here, right? And now it pulled back and sold off and dumped back down to, down this area here, close to the 200-day moving average, But as a day trader, if you getting in at these, these high key pivot points here, you don't see this level of extension that happened over here, you may buy up here, and that could be problematic, from a day trade perspective, right? You're gonna get caught in that that sell-off perspective, because again, at that point, the stock, the stock is already, pretty much extended. All right. So again, just got to be cognizant of that and make sure that you realize, go back and look at the previous chart history. I guess I'm saying all that to say, in a lot of ways, I know I kind of rambled a little bit today. My mind's so excited about this market tomorrow. You want to be comfortable in going back and looking at previous chart history. At any time you're trading any aspect of the market, day or swing trade, always go back and look at the previous chart history. Go look and see what other investor was thinking about at a time when they were trading the stock. And that'll, again, give you a key indication of, where people were loading in the stock and where people was selling the stock. All right. Again, supply levels up here, demand levels down here. There's demand here, obviously, right? You can see, in the volume trough here, how it rounded out, the rounded out bottoms, right? Even when the volume thinned out here, it still held this key level of support. It still held that bottom base level of support right here, right? Around about that 160.50 area. And then all you was waiting for more volume to come in, either a catalyst or something like that to happen in order for you to trade the stock. So again, it held, support a good key level for a good little while. And then when the volume actually came into it, as you can see here back on February, it started happening a little early, obviously around, February 22nd. But, when it really came in, obviously it came in like gangbusters back, on the, pretty much, on the after hour session here, actually when it broke out, going into the, going to the close, and then it broke out the next day, it gapped up, you know, it's weird here. Oh no, this is I forgot I got the weekly chart up. So no one else looking at it. Oh, this is the daily chart. No, this is the weekly. All right, let me see. That's the 5 minute. Let's pull it up from let's go to 1 day. Oh look, here's this thing. Okay. Let's go hourly chart, excuse me. All right, I'm gonna get ready to wind down here in a minute or two, guys. Again, I just want to kind of see this again, this chart here again from an hourly chart perspective. Back on the 25th. Basically what we're talking about here, when during that point where it was just consolidating, going sideways, and it broke out and went higher, right? It gapped up and went higher here into the 25th here again, and then again, it chopped out, pulled back a little bit, came back to that same kind of trough area, excuse me, here. Broke below it a little bit on this ugly wick here, but the main body of the candle still kind of stayed above, or it stayed within that channel of the breakout zone, and then it kind of rebounded to kind of end up going higher, right? So again, just key indication that that the buyers were still coming in. The volume obviously confirmed it here. Again, it's hindsight, but you can still see where people wasn't really ready to sell it outright altogether at this point. Because they like the stock for people like hold on stock for their own various reasons, but from a value investor perspective, if banks ain't really selling the big volumes, then that's a key indication that again, if you're gonna swing trade, then at least you got your money wrapped into the money, into some big money, so to speak. And so again, the stock obviously perform in a way where it wanted higher, obviously, and it held some key levels of support levels, and when it ended up bouncing and going higher. When it was all said and done, it ended up going higher. Right. And so again, just something to think about. So again, earnings coming up tomorrow. Excuse me, Tuesday. It has earnings. No, it's earnings after hours. After hours tomorrow, excuse me. Yeah, after hours tomorrow, if I'm not mistaken. And so I'm definitely looking at this for myself personally. That's why again I had it up. And I've been kind of looking at it for the past 4 days, just looking at it from different perspectives, in terms of how what it could do, all these different things that could happen here. And so we'll see how it's going to perform. Again, it's at, up here near some all-time high levels. And so the market may still push it higher. I don't know. But I definitely look forward to, seeing exactly how it's going to perform, one way or the other. When it happens, I'll fix it later. Not get into that because I don't want to keep you guys a little later, any more longer than we've already been. So all this stuff anyway, I'll fix it later. But again, just looking at that move, man, this thing is like a beast. This chart is just beast mode, man. This thing is beast mode. All right, so that's it, guys. Like I said, I don't want to keep you guys long. I do want to get ready again, kind of assess what what the market's going to do for tomorrow, and so I plan on having another session tomorrow where I can have all my, because I had my notes ready and they got mixed up, and that's why I kind of got off track a little bit in terms of what I really want to speak about, because I did a clean up on one of my file drives and all my stuff got misallocated. So I was searching for it. I don't want to go through all that at this point, haven't been on at this point, and then keep you guys in the longer at this point. Just kind of not be able to kind of really come off the off my notes the way I had them prepared. So I'll just do another session tomorrow, and we'll kind of pick up where we left off, but more or less I have everything put in place where we can just kind of go block for block, point for point, and then get through our value of breaking down these key levels of support, resistance, understanding day trading zones as opposed to buy swing trading zones, and then profit positioning value and scaling into the trade. And so that way we can have a little bit more accurate description in depth and detail exactly what I'm trying to convey. And so I'm sitting there like the same time, man, dang it, why I should have just pulled them out before I restarted this computer just a few minutes ago and make sure I had everything just sitting, where I wanted it to be. But no worries. I'll do another live stream tomorrow, and we'll go over it again in depth. With the way I had those notes set up, where you can see it, in depth again, to where those supply zones and those demand zones became, great levels to think about swing trading them as opposed to day trading them. Right. All right. So let me get ready to shut it down here. I'm sure the futures market is up and popping. Let's go see what the futures market is doing. At this point, we know we got all this crazy news happening with Trump throwing another curveball into the market with this whole, scenario that they're going to potentially have a trade deal, in the works by, I think they said within the next 3 weeks, right? So what you got here, I already knew it was going to be a market that's going to be pumping, but it's pumping. As you can see, it's already pumping here. This thing is on fire here in terms of the futures market here already, off that potential news that there's a potential trade deal. Or the value of it obviously coming to a head within the next 2 or 3 weeks, based upon the fact that they feel like they've reached some kind of value of agreement. And so what you have here, you have a massive pump. Right? Let's go look at the Dow. Well, let's go look at the S&P. You have a massive pump happening right now on that tweet, or that headline that that there's a potential trade deal coming to a head here within the next 2 or 3 weeks, right? So let's pull this up real quick and we get ready to get out of here, guys. Like I said, this definitely I mean, look at this gap up. Look at this gap up, guys. This ferocious gap up here. Look at this gap up. Right. Obviously, you got 3 inside bars. You can see the indication there that investors show you there. Three inside down bearish volume bars. It's getting volume bearish bars there to let you know at that point. Obviously, the trend kind of shifted at that point, basically. And so you got this like nice little pullback, little profit taking happening at that point. Again, got up there, hit a key level of what? A key level supply zone. If you go back and look at the previous chart history, I guarantee at some point that was a key level where it showed some weakness, right? And hold up, which chart is this? I know this. So this the monthly. That's the monthly chart. Let's see. Going back, mess around with trading. Oh, them go back further than that. Okay, no worries. I often say if you go back a little further, you'll see that that was a key level of resistance at some point. That's why obviously it hit that key pivot point there and it pulled back a little bit. But nonetheless, again, the stock is obviously up and it's pumping. It's pumping pretty hard here. All right, hold up. Pull the 1 hour chart. Hold up, man. This thing be tripping. That's why I don't like mess around with this whole. There we go. All right, dog. Like, kick in. All right, yeah. So again, just watching the futures here. So again, key level. So support pretty much at this point, is this 28.13 obviously, and this wick again. You can say that's the very base support. This 280, 28.11. But basically, looking at it from this, the point where the buyers really, showed that they were, holding, it's going to be this 218. It's going to be this 28.13, excuse me, 28.13 level here. So we'll see how it's going to react here going into the rest of the evening here. Whether or not we're going to have some follow through, or if it's going to break, eclipse this level of resistance here, break out and go higher. But at this point, you got a massive gap up in the futures market here, with the S&Ps, eclipsing, a very, very, a big loading zone area where it kind of eclipsed that and kind of, you know, gapped up way up in this you know, this no man's land, so to speak, no man's land up here, and just trending sideways here at this point, waiting for the next buyer, you know, lot to come in, the next, you know, session of people to come in and take this thing potentially higher. Because I guarantee what's going to happen, just looking at how they got this thing positioned here. Well, I don't say I can guarantee, but just the way how this thing is setting up here, that you may have a test potentially of this 2.8, you know, excuse me, I want to say 2.8, this 28.13 level possibly, because it gapped up so high, so furious here. Maybe, you know, eclipse this candle here, and then you may have some buyers come in a little bit later, you know, maybe around, I don't know, maybe midnight around that time, maybe in the AMRs, they may come in, try to buy it up again, try to push it higher to test the resistance level, or maybe get closer to 4 a.m. hour. It may kind of, you know, try to test that area again. If not, it's definitely going to sell off. All right. If it don't break out, you know, get back up into this level of resistance around maybe about 2-3 a.m., yeah, it's probably going to pull back a little bit. All right, you know, going into the when the market opens up at 4 a.m. Right now, it's extended like all outdoors. Right, but that's the futures market at this point. So we'll see what comes from that. Right now, again, the Dow's just banging. Look at the Dow. NASDAQ banging. Obviously, you know, the VIX obviously definitely going to be down. Let's see what the commodities is doing. Oil up a little bit. Brent oil's down, but crude is up a little bit. It actually took a beat a little bit last week anyway, too. So it's trying to recover a little bit. Staying within that, you know, underneath that, you know, $6 range. So based about $54, $55 a barrel to about $6 range is stuck in a nice little zone there for quite a while. So let's see, just looking at the weekly chart in it. Yeah, so just like I said, see $55 a barrel. It's staying within that zone between that and, you know, 60 at the top, but, you know, 57, 58, they seem to be kind of problematic at this point. So that's what oil been looking like here recently. And so, you know, waiting for its next level of potential breakout. So again, speaking about what we were just talking about, supply and demand zone, loading zones, right? So $55 seems to be holding pretty well thus far. If you go back, look at the weekly chart, around this area here, this is the loading zone, right? This is when you want to be buying this for the swing trade. Right up here, right, resistance a little bit, right, you know, pull back a little bit, right, went up and tested again, went a little higher, right. This is your supply zone, right. This is when people got exhausted and they selling off. So again, this same thing we was talking about earlier, loading zones when you find them, right, and then what, you know, when it's time to sell. So looking at it now, you know, pull back close to that, you know, $56, and it's kind of sitting somewhere near the middle. You know, obviously you'll be fortunate to want to get in around 55, but, you know, as long as it's below, you know, the halfway mark value, you know, you make a look at it for a nice little potential pivot point. You know, if you got some abnormal volume come in, probably potential, you know, push it higher, test that resistance level of 57, 58. But the ideal way to buy it was around here near this $55 zone. Right down in the 55s where the, you know, was the best area to be buying it at. Right, so again, just something to you know, think about again when you're looking at it from that perspective. And obviously, gold pulling back, you know, that's typical with the way that this market here pumping here after hours, or what I say after hours, I mean doing the futures market. All right, but that's it. So let me get out of here and look at China. China is banging right now. Obviously, makes sense because again, it's this whole China and, you know, American trade deal stuff. So obviously, China's up. You know, figuratively so because of the news. And I mean, the China 850 is banging right now. Look at this. You know, that's off the no, that's the old from so 50, 72, 50. Yeah, this thing is pumping. Yeah, it's gonna be banging. Yeah, tomorrow might be you know, throw a dart at the wall, throw it at the stock, and it might just go up just on GP. And this market is pumping here in the futures market here. It is pumping. All right, guys, let me get out of here. Yeah, I'm rambling a little bit at this point here. I'm tired too a little bit in the same breath. All right, but either way, guys, again, we'll be going live again tomorrow. finish off where we left off, more or less, and kind of do a whole revamp. I may revamp, just do the whole thing over again based upon again having my notes available and all my my charts set the way I had it, like I wanted to have them set up. And we'll kind of go back over some of those things that we'll speak about as far as day trade perspective and also swing trade perspective. All right, guys. So again, power profit to you. Again, make sure that you take the time to assess your situation in terms of how you value the market. Understand there's a lot of things that's outside of our control in terms of these trade deals and tariffs and all the kind of stuff that's happening. Make sure that you position yourself properly based upon what the previous chart history is showing you. So again, you don't kind of get caught out there buying too premature or too late or after the fact when everything is already kind of then unfolded. So give yourself enough time to properly position yourself, and so you can make the best trade that you can effectively give you the best profit value. All right. So with that being said, guys, I'm gonna get ready to get out of here. Power and profit to you guys this evening. Uncle Johnson Neb. I look forward to getting with you guys again tomorrow. I think I'm gonna do a live through the intraday aspect tomorrow too. So we'll do some live trading out the gate. Right? Maybe trade some options, trade some really common equity stocks, whatever the case like that. And make it more of a day trading conversation more or less than just doing a straight workshop kind of reality. All right. So I think I'm gonna do it that way. That'll be a great way to kind of do it all in real time. So you can see it in real time. Excuse me, doing it, as opposed to just doing it after the fact or after the day is over with. All right, guys, let me get out of here again. So power profit, Uncle Johnson there. I look forward to seeing you guys tomorrow. Thank you for sitting there and being a little patient throughout the day, a little bit, the evening here. And I look forward to seeing you guys tomorrow. All right, guys, power and profit.